Hello, welcome everybody to today's presentation. Today's national webinar is a Q&A webinar. We are going to take live questions from attendees and provide an answer to those questions. There is a focus today on small business plans, the different types of retirement plans that exist for people that are self-employed or have small businesses, but we will take questions from any items that are related to self-directed IRAs and anything that you would like to discuss today. My name is Patrick Hagen. I am a regional business development manager with the company. I've been with the firm for about a decade, about 10 or 11 years now, and I enjoy what I do, and I enjoy these Q&A webinars because it's an opportunity to get answers directly to people to the questions that they have in mind. The setup today is a little bit different than a lot of our webinars. Typically we have a topic and we go through the slides kind of piece by piece and talk about that topic. With today's webinar, there really is no formal topic. The topic is just questions and answers. So if there's items that you would like to discuss or things that you're unclear about, please chat those to me. There should be a chat box in the bottom left corner of your screen. When you chat in your questions, those will come directly to me and to the chairperson. We will read the question aloud, provide an answer, and do that until we either run out of time or run out of questions. I think the layout here is good for the webinar platform because I think what we find is a lot of times even with a topic we end up drifting off into various topics based on the questions that we received. So we put together a Q&A just simply so that we could do a town hall meeting type platform and have an opportunity to answer whatever questions come up about self-directed IRAs. And again, today it's anything you want to talk about, but we're going to spend a little bit of time on small business plans because that's kind of the focus of what we're looking at right now. Quick disclaimer about the Entrust Group. Entrust does not provide any investment advice or endorse any products. All information and materials are for educational purposes only. All parties are encouraged to consult with their attorneys, accountants, and financial advisors before entering into any type of investment. This is important with the self-directed IRA. We enjoy sharing our experience and answering questions about self-directed IRAs, but we cannot play a role of a fiduciary and we cannot give any investment or tax advice. So if you're looking for legal, tax, or investment advice, you would need to seek that from another party. Unfortunately, the Entrust Group is a self-directed provider. We cannot provide that information. A little bit about our company before we start taking on the questions here. We are one of the premier providers of self-directed IRAs. We have been in the space now for over 30 years. We started in 1981. We have several $billion in assets under administration, and we are one of the largest companies that operate in the self-directed IRA industry. From a volume standpoint, we do a lot of transactions. We have a lot of clients and a lot of activity. In any given month, we can process between 12 and 16,000 transactions. So we've got a good staff in place. We're well staffed with a lot of people in our Oakland, California base office. We've got a couple of regional offices throughout the country as well so that we can answer questions and give kind of a one-to-one point of contact in a spot that's a little closer to some of our folks in the East and Central time zone. And then we've got an office in LA and Orange County as well for folks down there. We also just created something that I'd like to bring your attention to, this hashtag in the bottom right corner. It's hashtag AskEntrust. We realized that we get a lot of questions. As a regional business development manager with the company, I'd spend on average probably about 80% of my day on the phone. The majority of that time is talking to clients, prospective clients, CPAs, attorneys, title companies. It's basically people that are looking for information. So where we're not an advisor by any stretch and we cannot play the role of advisor, we do operate in the self-directed industry, and we have been doing it for a long time. So we do have a lot of answers to questions that are popular questions for self-directed IRAs. So we put together a learning center on our website, which has a ton of information. We have people on staff and client services that answer calls. We have people spread throughout the country that can answer calls and meet face-to-face. But we also created hashtag AskEntrust. So if you're on Twitter and you'd like to ask a question, maybe today if you need to leave the call early but there's something you'd like to cover that maybe we don't have time for, feel free to hashtag us at hashtag AskEntrust, and we'll be able to provide a response. Self-direction defined. A self-directed IRA at its core is an IRA. The term self-directed is a descriptive term that kind of describes the types of IRAs that we administer. But an IRA is an IRA. If you have a traditional IRA with a brokerage company, at its core, it's no different than a traditional IRA with Entrust that is quote-unquote self-directed. The difference being with a self-directed plan, the administrator doesn't tell you what to do with your money. We don't give financial advice. We don't sell any products. We don't work off commission. So by virtue of that, you can take your self-directed plan and invest in anything you want. Anything that the IRS allows to be held through a self-directed retirement plan. So what you find is that generally speaking, the limitations that most people feel are institutional limitations that they receive from the institution that's administering their account, not necessarily an IRS limitation. When you look at what the IRS allows for retirement plans, it's pretty flexible. Really, anything other than life insurance or collectibles can be held within a retirement plan if it's an investment held for investment purposes. So when you look at things like real estate and private placements and private notes and precious metals, these are things that have always been available for people through a retirement plan, but maybe they don't have the flexibility with their current provider to do those types of things. So that's why companies like Entrust exist, is we fill that void. We hold those niche assets that maybe other companies generally don't like to hold. That's what we do. So it gives you a greater opportunity to diversify out of just standard stocks, bonds, and mutual funds and do some stuff in alternative investments and non-correlated investments. If you want to buy a rental home, or if you want to buy some land, or maybe you want to lend money through your IRA, these are all things you can do with us that maybe you can't do with your current bank or brokerage company. As I mentioned earlier, the essence of the webinar today is just questions. So I see questions already coming in, which is exciting. So we've got a lot of people on the call and a lot of questions coming in. We put together a couple of popular questions here. What is the cost of setting up and maintaining an employer-sponsored plan? Are there any mandatory contributions? What plans allow for the highest tax deductible contributions? So again, we kind of got to focus today a little bit on those self-employed people and the self-employed plans that they have at their disposal. But any question is available. Any topic is available. If there's something that I feel we cannot answer in the time allotted, or if there's something that kind of moves into legal or tax advice, I may defer the question and send you back to a CPA or attorney. Or if there's something I think might be better to discuss offline, I may just have that conversation offline. But ultimately, what we want to get to here is whatever you want to get to. So whatever questions you have, we're going to answer. Moving forward, this is the next part of the presentation here. Just let's start taking questions, and I see that some are pouring in already. It will take me just a moment to read the question. I'll read it aloud and then provide an answer. And please bear with me because it is going to be just a little bit choppy because we move from topic to topic. There's no cohesion between the topics that we're covering because we're covering really anything that comes across the table here. So feel free to start typing in those questions and I'll start providing answers to them. Okay, there's a question here about life settlements and whether life settlements are an option for a retirement plan. Can an individual take a retirement plan and invest in a life settlements investment? The short answer is yes. We have clients at Entrust that hold life settlement contracts within their IRA. The life settlement asset class is slightly unique. It's a little bit different than what we see with people that buy real estate, private placements, and private notes. Which, along with precious metals, kind of make up the big four asset classes that we see quite a bit of. But the life settlement is something that is permissible for an IRA to take part in, and as an administrator of self-directed IRAs, you could invest in a life settlement investment through a self-directed account with us. And we have had clients do that in the past, actually quite a few. I don't know where it fits as far as like the percentage of our assets that we administer. It's a smaller percentage, but I would say there's a fair amount of clients that are in Entrust that do hold life settlements within their tax-deferred retirement plan. So the short answer, yes, you could absolutely do that within an account with us. Another question is, what are the advantages or disadvantages of transferring an existing X401k plan to a plan with Entrust, specifically a small business plan with Entrust? And that's a great question. When you have an employer-sponsored retirement plan, whether that's a 401k or a 403B or a 457, whatever type of plan it is, when you leave that job, that's called a triggering event, and that allows you to then roll the money out to a plan with another provider. If you work for a company that has a retirement plan, they may or may not allow you to move that money out. But once you leave that job, you can move it out to whatever company you want to. And, again, at Entrust, we don't advise to do necessarily anything, but I would say it's a pretty good idea to go ahead and get that money moved, only because if it's sitting out with the old provider, chances are nobody's really managing that money. Nobody's controlling what the investments are. Nobody's advising on it. Nobody's directing what's taking place. It's probably just stagnant. It's probably just sitting in whatever it was sitting in before, maybe just sitting in cash. So it's always a good idea to remember where your retirement money is held. Go ahead and get that money, move it over to somebody, whether that's a self-directed account with us or a brokerage account or whatever you want to do, but go ahead and get it into a plan where you can start actively making investments and controlling what your holdings are within that plan. Now, as far as the type of plan that you move it into, a lot of that's going to be determined by your new employment situation. If you are self-employed, there are a couple different plans that self-employed people have that other people that are not self-employed do not have. I, for example, am not self-employed. I work for Entrust. I'm a W-2 employee. So my options for an IRA are either a traditional IRA or a Roth IRA. That's all I can do. But somebody that's self-employed, there's three other types of plans that are available. There's what's called a simple IRA, S-I-M-P-L-E. There's a SEP IRA, S-E-P, and there's what's called an individual 401k plan. We can talk about these in depth if you like. If you have questions, I can answer any questions you have about contribution limits or the features between the three plans. But the key takeaway is that with a simple, a SEP, or an individual 401k, the contribution limit can be quite a bit higher than what you find with a traditional or a Roth IRA. With a traditional or Roth, if you're under the age of 50, you can only put in $5,500 a year. That's it. That's the maximum that you can put in. Whereas if you take, for example, a SEP or an individual K, it could potentially go as high as $53,000 a year. So it's a much higher potential contribution depending on how much you pay yourself as a self-employed person and some other factors that come into the picture. But you need to look into that if you're self-employed. Talk to your CPA, maybe talk to Entrust about what types of plans are out there, because you're not necessarily capped at $5,500 a year. You could feasibly put in a lot more. So that's kind of the advantage of doing a self-employed plan like a SEP, Simple, or an individual K. Any of these plans can be self-directed. You can self-direct a Roth, self-direct a SEP. It doesn't matter. We're an IRA provider that can hold any type of plan, and any plans with Entrust can invest in alternative assets like real estate. And leading into the next question here, very seamlessly, is what is the contribution limits for an individual with a SEP IRA? A SEP, again, is a self-employed pension. It's a self-employed individual retirement plan. It's an individual retirement plan for a self-employed person. At its core, it is a traditional IRA, but the difference is, as a self-employed person, you can contribute more to a SEP IRA than you could to a standard traditional IRA. And the contribution limit for a SEP for 2015 is 25% of compensation with a maximum $53,000. So if you have $100,000 of compensation, you could put in about $25,000. If you have $400,000 of compensation, you're maxed out at $53,000. So typically with a SEP contribution, my experience has been the individual goes to their CPA. Their CPA will calculate literally to the dollar how much it can put into the SEP for the year, and then they put that money in. That becomes a deduction for the business that they're contributing for the SEP plan. So again, it's 25% of comp, max $53,000 per year. Okay, I have a question here. It says, I have a client that's interested in using his IRA to purchase a commercial building and use part of it for his business. Can this be done? And if so, how? And if not, why not? Great question. The short answer is, unfortunately, no, that cannot be done. And the reason for that is that if you buy an asset within your retirement plan, you personally cannot use that asset. There are certain people called disqualified persons. Those people are you, your parents, your kids, your spouse, and the spouses of your children. These people cannot have transactions with your IRA and cannot use or benefit from the assets that the IRA owns. So if you were buying a house, for example, you cannot live in the house, and neither can your son or your wife or your parents. Now with a commercial property, for example, I'm sorry. Are we having a little bit of trouble with the phone? Caroline, can you hear me? Caroline, can you hear me? Apparently we're having some technical difficulty. I'm just making sure that people can hear me on my phone. Good now. Okay. Sorry about that. Apparently the phones went out for just a moment. My apologies. But anyways, going back to the question about could you buy a property through an IRA and use it for commercial purposes? The answer to that would be no. If you own the business, you would not be able to run your business out of a property that's owned by your IRA, because the code states that you, as a disqualified person, cannot benefit directly or indirectly from anything that's held within your retirement plan. So that means you can't use the asset, you can't benefit from the property, you can't work out of the property. So if you're going to buy something with your retirement plan, you're basically allocating that asset strictly as an investment. Now, you can lease it to a business, you can lease it to another individual, and they can pay rent back to your IRA account each month, and that's perfectly acceptable. But you, your kids, your parents, your spouse, and spouses of your children cannot utilize that property, and the rules that apply to you and those people I just defined also apply to any businesses that those people own or control. So if I have a business that's owned by me, the rules that apply to me apply to the business in the same sense. So hopefully that answers the question. And those rules come directly out of the code. The code section that governs everything that we do is section 4975. If you want to write that down, it's IRC 4975. I can send you a link to 4975 if you like after the webinar. I'll give you my email address. But that's where we gather all the information that we then put out on our website, and when we're answering questions to prospective investors, it all comes out of the code. Entrust as an institution has relatively few, if any, internal rules that we enforce. Basically, we just take what the IRS states is permissible or not permissible and relay that to our clients. So when people ask me questions like, well, why can't I use the property that my IRA owns? It's because it's in the code, because 40 years ago when they drafted the rules, they said that that was not allowed. Now, you could go into the rationale as to why it is the way it is, but it's secondary to the fact that it is what it is. And when you're dealing with the IRS, unfortunately, it's predominantly black and white, very little gray, and that's one of those things that there just doesn't seem to be a lot of flexibility on. Very good question, though, and it's an important one, because you don't want to buy a property thinking you can use it and then find out later that you're not going to be able to use it. Okay, another question here. This is about a solo 401k. Now, the term solo 401k is another term for an individual 401k. Those two are used interchangeably. I kind of like the term solo 401k. It's a little more descriptive, but either one, we're talking about the same thing. So it's asking about a solo 401k with cash balance and a pension plan. I don't really see a question here. So I think maybe this was a question from a question before. I'm going to have to scroll up and see if maybe I missed something. Oh, okay, I did. Sorry, I missed the first question. So the question was, what is the absolute total that a self-employed individual can put into their qualified plan? So I gather here that somebody's got an individual 401k and they want to figure out what the maximum contribution is. For 2015, the max is going to be $53,000 a year. Now, the way it works with an individual 401k plan is you have two components to it. You have the employer and the employee. So the easiest way to describe it in my mind is to think of your business plans, your businesses that have 401k plans. So if I work for Entrust and I earn a salary from Entrust, I get paid a salary, and of that salary, I can put some of my salary into my 401k plan. And then the company, Entrust, can also match a portion of what they pay me and put that into my plan. So it's two chunks of money going into one plan. It's my money as an employee, and then the company money as the employer. With an individual 401k plan or a solo 401k plan, the individual is basically wearing both hats. They are the individual as well as the business because they're self-employed. By definition, you have to be self-employed to have an individual 401k plan. So you've got two chunks of money going in. For the individual that's putting in money for 2015, they can contribute up to $18. Now, the company can match 25% of compensation up to a total maximum of $53,000 a year. So again, with an individual 401k, 2 chunks of money going in, your contribution limit will be a function of what you're paying yourself, but you can get up to $53,000 in a given year, which again, compared to a traditional IRA, is quite a bit more, because the same individual with a traditional IRA can only put in $5,500. So a significantly higher contribution limit for an individual K versus a traditional or Roth IRA. Now, individual Ks are slightly more involved. The application is going to be a little bit more involved because you're setting up a plan instead of an IRA, and there is an additional cost to holding an individual K with Entrust. The difference in cost is that there's a $399 quote-unquote plan fee. So essentially $400 to hold the plan. With an IRA at Entrust, you just pay us to do transactions and hold investments. There's no overarching fee. With an individual K, however, there is the off-the-top $399 plan fee. And the reason for that, without going into a lot of detail, is there's a little more administrative burden on us with those plans. Those plans need to be updated periodically. There's just a little more that goes into it. So it's not quite as simple as holding a tax-deferred individual retirement account. A solo 401k is a little bit more involved on our end, which is why we charge a little bit more to administer them. But still, relatively speaking, $400 a year is quite a bit cheaper than if you went out and tried to buy your own plan and have somebody customize it. That could range in the thousands of dollars instead of hundreds of dollars. So I can send you information if you're interested about the individual K, as well as the SEP and the Simple, and you can kind of compare if you're self-employed what type of plan is going to fit best for what you're trying to do. Because sometimes when you run the numbers, it's easier to do a SEP than a solo K. Sometimes the contribution limit for somebody in a solo K is significantly higher than a SEP. Like just a simple example, say you pay yourself $100,000 a year. Well, with a SEP IRA, the most you could put in would be $25,000. Whereas with a solo 401k, with that same $100,000 of income, you could feasibly get up to $53,000 to hit that max. So it really depends on what you are paying yourself, your situation, how much you're trying to contribute, and what you're looking to do. Take all that into the picture, talk to your CPA or your accountant, and figure out what type of plan is going to be the best fit, and then come back to us and let us know which type of account you want to open. But it's important to understand that if you are self-employed, you've got options. And the reason for that, without going into a lot of detail, is that you don't have the benefit of the company-sponsored plan. Like I mentioned, I work for Entrust. We have a 401k, so I get to be a part of that 401k. If you're self-employed, you don't have that company-sponsored plan, so the IRS allows you to do the Simple, the SEP, or the Solo K. So it's kind of to balance the equation a little bit. Good question. Question here is, can I buy gold coins with a self-directed IRA, or are they considered collectibles? That's a fantastic question, and we have webinars on our site strictly devoted to precious metal investing, because that question can be easily answered in a short answer, but could also be elaborated on quite a bit, and we could talk for a good 45 minutes about that. We allow our clients to invest in metals that are specifically designated as permissible per the IRS guidelines. And the Taxpayer Relief Act of '97 came out with some pretty clear guidance as far as what works and what doesn't work with metals held by a retirement plan. And the answer to your question is it depends on the fineness quality of the metal. With I shouldn't quote these off the top of my head in case I'm incorrect, but I'm pretty sure I'm correct on these. Like with gold and silver, for example, with gold, the finest quality in order to be IRA compliant is 0.995. With silver, it's 0.999. So what that means is if you have a collectible coin, or another term is numismatic, you have a numismatic coin, and it doesn't meet the finest requirements that the IRS has put out, those coins are not allowed within a retirement plan. Those would be defined as collectibles and therefore would be prohibited from being held within an IRA, because by definition you cannot hold collectibles within an IRA. But those certain coins that meet the finest requirements, or the American Eagles, because the American Eagles are specifically designated as being permissible, those are allowed. And we've got a precious metal team that can facilitate the buying and selling of precious metals all within a retirement plan. We have special discounted rates for precious metal clients that want to buy and sell gold and silver, or you can do platinum and palladium if you're interested in that. But it all comes down to whether or not the coin or the bar that you're buying meets the requirements that the IRS has set. And we've got some pretty good PDF files that I could email to you that detail that pretty well. Or you could just call. Sometimes people just call and they run it by us and say, I'm looking at doing XYZ coin. Does that work for an IRA? And we do enough of these transactions that we know what works and what does not work. Question here is, can I use a self-directed IRA to flip a house? Yes, you could flip a house through a self-directed IRA. If you buy something with an IRA, there is no determined time frame as far as how long you have to hold that property or hold that asset. I could buy a stock on Tuesday and sell the stock on Wednesday. I could buy a house in June and sell the house in July. There's no problem with that. The key thing to understand with the fix and flip is that the IRA is buying the investment, therefore the IRA has to pay for any improvements to that investment. If you're going to go in and do some work, you need to make sure that constructively that work is being paid for by the IRA and not by you individually. The other thing to understand is that you're not allowed to physically do the work. So you can't go out there and put in your own sweat equity. What the code states is you're not allowed to provide, quote, goods, services, or facilities between yourself and your retirement plan. So you're allowed to stand behind the person with the hammer and tell them where to hit the wall. You're not allowed to pick up the hammer yourself and hit the wall yourself. And so those types of things are important to understand. Again, this is an IRS limitation, not necessarily an Entrust limitation, but part of our role is to explain to you what's in the code and what's allowed and what's not allowed. And flipping a house is allowed as long as somebody else is doing the work or the quote-unquote flipping part. So you're going to control what happens, when it happens, and how it happens, but constructively it's paid for out of the IRA, and the paperwork associated with it is going to report back to the IRA as well. But I have had clients do fix and flips in the past. Okay, there's a question here about pension plan money that was received as a result of a divorce, and the question is whether or not that money can be moved. I think the actual question is whether or not the money can be moved while the ex still works for the company. And I'd have to defer that back to the plan. Every plan is different. When you're talking about individual retirement accounts, it's easy to talk in certainty because an IRA is an IRA. It doesn't matter if it's with us or a bank or a brokerage company. The rules that govern IRAs are the same across the board. It's not necessarily the case with qualified plans, though. With qualified plans, every plan is different, and it's the plan document from the provider that specifies what you can and cannot do. So a lot of times people ask, can I move money from my existing 401k to an account with Entrust? And my answer would be, you have to check with your 401k. It may be that your plan allows you to move money whenever you want. It may be that your plan says you have to wait until you retire or till you terminate employment. It may be that your plan allows you to move some money, but not everything. So it all comes back to the plan. So in this case, with a plan that was received via divorce, the flexibility of that plan, the portability of those funds are really going to depend on the plan. I would recommend contacting the plan administrator, telling them what you're trying to do, i.e. move money out to a plan or an IRA with another company, and see what they say they allow you to do. Okay, good. Good questions, by the way. I got a couple of people chiming in if they can hear my voice. I don't know what happened earlier with the dropped call, but I apologize for that if I disappeared for a moment, but it sounds like people can hear me, which is good. Moving on, a couple more questions here. Somebody's asking for me to send them a link to IRC 4975. That's a link to the code that I've mentioned that has all the rules for IRA and 401k investing. I don't want to put the burden on anybody to do something. I unfortunately am going to get probably, I don't know how many questions, quite a few questions here, and it's hard for me to keep track of emails. So what I'm going to do is give you my email address. In fact, I'll give it to you right now just in case you need it and need to run. But my email address is phagen@theentrustgroup.com. It's on the bottom of the screen. If you want to send me an email requesting whatever you're looking for, I can, when I get done with the presentation, send that back to you. So if you're looking for a copy of a PDF file that talks about SEP IRAs, or if you want to know what the contribution limits are, or a link to 4975, or maybe you want an application to establish an account, just shoot me a quick email. Again, it's phagen@theentrustgroup.com. And if you're looking to contact our corporate office, I'll remind you again of our hashtag AskEntrust. But yeah, I'd be more than happy to shoot back that link to 4975. It's IRS code. It's not, it's not the hardest thing to read, but it's also not like reading a novel. But if you look through it, the rules and the guidelines are pretty clear. Now, there's been a few things that have been brought up in the past that maybe people have challenged, or rulings that they've challenged the interpretation of the code. But for the most part, I think it's pretty black and white. I mean, I don't have a lot of difficulty where I sit answering questions for the majority of people that ask questions, because most of what we do is pretty clear. But there's always a little bit of gray, and when it gets gray, you sit down with your CPA or your attorney and you have them review the potential transaction and weigh in as to whether or not they feel it's a good idea or a bad idea. If you really want to go another step, you could petition for a private letter ruling and go directly to the DOL and have them issue something specific to you and your situation. But most of it's pretty clear, and again, that's in 4975 of the code, and I'd be more than happy to email you a link if you want to send me an email requesting it. phagen@theentrustgroup.com. Back to the question slide here. Okay, what is the contribution limit of my employees in our SEP plan? Is the total $54,000 for all employees? No, the total is not capped out at $54,000 for all employees. With the SEP IRA, the contribution limit is 25% of compensation. That's for each compensated employee, up to a max of $53,000 in a given year. So let's just say hypothetically, you have two different people that both make $100,000 a year, and they're both part of a SEP. They could both put in roughly $25,000 into their SEP IRA. The fact that that is, well, I guess in that case, bad example because it doesn't go over the 53. But the short answer is no. You can contribute more than a total of $53,000 to a SEP if you have employees and their income warrants that type of contribution. So the individual is capped at 25% of comp, max $53,000 a year. That's not a company or a maximum. So hypothetically, if you did have multiple employees that were part of a SEP, and overall the contribution was more than $53,000, that would not necessarily be a problem as long as the number worked out for each individual, and each individual was under that $53,000, 25% of comp limit. Okay, another question here. We're considering an individual 401k plan tied to my wife's real estate business. Besides the setup, what range of services does Entrust provide? Tax filing, document review, consultation, etc. So we've got actually two different types of 401k plans that we offer. One of them is where we provide our standard administration like we would for an IRA. That's what we call kind of our traditional service model. I don't know the exact term for the new one that we used to call our do-your-own plan, but that title was somewhat descriptive because we have another plan where you essentially do everything yourself and you just rent our plan document for a flat fee of $400 a year. So with one, you're taking the plan document, but we're not doing any record keeping, any administration. We're not facilitating purchases. We're just essentially giving you the plan document, and you're doing everything else. The other, the more standard traditional service model, we're giving you the plan document, but we're also administering assets, processing investments, holding the cash, everything that we would normally do for an IRA client. And so typically the do-your-own plan where you're taking control of everything yourself is really reserved for people that have more of an accounting background, people that have done plan administration or asset administration in the past and kind of understand how that works. If you're brand new to it, I don't know that a do-your-own plan is going to be a good fit, but ultimately it's up to you to decide that. With our model at Entrust, whether we're administering an IRA or an individual 401k or any other type of plan, it's basically we facilitate what you direct us to do when you direct us to do it. So we hold the plan, we hold the money, we process investments when you direct us to process investments. So if you find a piece of property and you want to buy it with your retirement plan, you're going to figure out what property you want to buy, what you're going to pay, who's going to handle the closing, all of the details surrounding that. But we're going to actually facilitate that purchase. So you direct us, we process. I kind of joke sometimes that we are highly educated, very responsive order takers. We just take orders and do what you tell us to do when you tell us to do it, but you're the one controlling it. You're the one driving the bus, so to speak. So that's the same with an individual K as it would be with an IRA. One distinction would be with an individual K under the full service model, you could technically sign the documents. With an IRA, we have to sign as the IRA administrator. With an individual K, the trustee, which is you in this case, could sign the actual documents for the individual 401k plan. There's another question here about Martha. I'm gonna have to speak to you offline on that. I apologize. I don't fully understand what you're asking. It's something to the point of having a 401k profit sharing plan and a pension plan with the total amount. I'm just not quite following where you're going with that, and I don't want to provide an answer, unfortunately, if I can't understand the question. So if you'd like, maybe when we get off the phone, if you want to give me a call or shoot me an email, again, I'll give you my contact information. I can answer that question a little more one-to-one. Yeah, there's a question here. Somebody says they have a question. If you have a question, just type that in. That's probably the best way to do it. By unmuting people and bringing them live on the phone, it creates a bit of a technology nightmare. So we're just doing everything with typed-in questions. So in the chat box, type in a question. I'll provide an answer, and that's probably the easiest way to handle it. Another question here is I have a simple, a SEP, a individual 401k, and I have an LLC. Is that considered self-employment, and would it be able to set up one plan to put all the funds into? So typically you wouldn't have a simple and a solo 401k and a SEP all active at the same time, but I would imagine in this case there probably was different plans at different courses of this person's life. So maybe at one point they had a SEP, then they had a simple, then they had a solo 401k. Those plans could be consolidated into one plan if you want. They could all be rolled into an IRA if you wanted to roll into a traditional IRA. The only type of plan that can be a little restrictive is a simple. With a simple, there's kind of an odd rule that you can only move simple to simple for the first 2 years that you have the simple. So you wouldn't be able to go from a simple to a 401k or a simple to a traditional IRA for the first 2 years. After 2 years, you can move it out to whatever company or whatever type of plan you want and do whatever you want as far as portability of those funds. But for the first 2 years, you can only move a simple to a simple. But if I have a SEP, I have a solo K, I have a traditional IRA, and I want to combine them, you can combine them all into one, or you could have multiple plans. It doesn't really make much difference. But typically, as far as participating in a self-employed plan, whether it's a SEP or a solo K, you'd only have one active plan in a given year. You wouldn't have a SEP and a solo K active at the same time. You would pick one or the other, and for that year, that's what you would participate into. Question here about the fees for self-directed retirement plans with a person buying property, in this case a larger account like $400,000. So the fees are pretty simple. There's a fee schedule in our application packet, or you can download it from our website. There's two options for paying us our admin fee. One of our options is based on the number of assets that we administer. The other is based on the value of the account, and it's an either-or election. You're either going to pay us $299 per asset per year, or you're going to pay us based on the value of the account. If you go with the flat $299 per asset per year, it doesn't matter what the value of the asset is or what the value of the account is. $50,000, $400,000, $2 million, it's all just going to be a flat $299 per asset per year. The value-based option is set up for people with either smaller accounts or people that have a lot of investments. If you're going to come on board and buy 6 different assets, it's probably going to be cheaper to pay us based on the value of the account instead of almost $300 per asset times 6. That's going to add up pretty quickly. So a lot of times, the more active people are, the more advantageous the value-based fee option becomes. But it's up to you to look at the fee schedule and figure out which option is going to be a fit. We like to give our clients options because we don't want to peg everybody into one fee option, because inevitably we'd probably weed some people out that maybe are interested in working with Entrust but just can't afford it based on their situation. So between the two fee options, I think we fit what most people are looking for. Some of our competitors are strictly fee-based on the number of assets. Some are based strictly off the value of the account. We give you kind of a hybrid option you can pick between. So, if you came on board, you bought one investment, you're on fee option 1, you're paying us about $299 a year. Now, there could be some miscellaneous things like wire transfer fees or check writing fees, things like that, and our fee schedule details all that. But our standard base fee to hold an investment would be $299 a year. Moves into the next question, which is what are the fees to set up an ongoing solo 401k? Exactly the same from an ongoing perspective. The difference is the plan fee is an off-the-top plan fee, and the plan fee is $399. That's before the administrative cost of doing transactions or holding investments. So to put it simply, if you have an IRA that owns one asset and you're paying us $299 a year, that would be all that you pay us. If you have the exact same one asset in an individual 401k, it's $299 for the asset, but an additional $399 for the individual 401k piece. So a lot of times, as somebody that works with new prospective clients, I'll ask the question, do you need the solo 401k? Does the individual 401k provide you with enough benefits to justify that additional $400 a year fee? And a lot of times the answer is yes. With the higher contribution limits, the fact that you can borrow from it, there's got the Roth component, you can put in after-tax dollars to an individual K. There's a lot of neat things you can do with an individual K, and $400 is probably justified there. But if you're just looking apples to apples, and the contribution is not going to be different between a SEP or an individual K, and you're just looking to hold an investment, you might be better off this SEP and save that $399 plan fee. But that's all, again, going to be contingent on your situation. We can talk through that. We can tell you what the different fees are going to be. It's all documented in our fee schedule, so there's no hidden or wrapped in fees. You're going to see exactly what we're going to bill you for and what we're going to do for you for that fee that we're charging, and it's all going to be at the beginning of the relationship, and it's going to be very clear. Okay, another question here. There's a question about investing a retirement plan into an S-Corp, and this is an interesting thing because it's not necessarily prohibited from an IRA standpoint, but it is prohibited from an S-Corp standpoint. And for whatever reason, S-Corps have rules that state that IRAs or any retirement plan cannot be a shareholder or an owner in a subchapter S corporation. So if somebody wanted to take the retirement plan and invest in an S-Corp, we would not be able to do that. Again, not because the IRA can't do it, but because we know that the S-Corp technically cannot accept an investor that is a retirement plan. So you cannot take an IRA, whether it's with Entrust or anybody else, and invest it in a company that files as a subchapter S corporation. That's a very good question. If it's a C Corp, or if it's a company that doesn't file, whether it's an LLC or a corporation or whatever sole proprietorship, as long as it's not an S-Corp, you're fine. And again, S-Corp is an election. It's a tax filing election. It's not really a type of company, so it's not like you set up an S-Corp. You set up a company, and then you can elect to file as a subchapter S corporation. And if you do that, you basically eliminate the potential of your IRA or another IRA investing in that company. Okay, a question here is, if I want to buy a house using a self-directed IRA but I don't have enough money, could I borrow funds from my husband's self-directed IRA to make an investment? The answer to the way you phrased it is no, but I'm going to elaborate a little bit on that. You would not be able to borrow money from your husband's IRA, but you could partner your IRA with your husband's IRA to make an investment together. So take example, you typed in here like 80-20. Let's say that your IRA has 80% of the amount needed to make the purchase, and your husband's IRA has the other 20%. The two parties can go together to make an investment as split ownership into that property. So in this case, 80-20. The deed would actually show that 80% of the property is owned by your IRA, 80% or 20% of the property is owned by his IRA, and then you would just keep everything proportionally split for the life of that investment. So that 80-20 is going to be the case for any expenses as well as any income coming in or out of that investment. And that does work. As long as it's set from the beginning and it remains consistent, there's no issue with that. Now, it's important, again, that it's set from the beginning. If you have a property that's owned by your retirement plan right now, your husband's IRA would not be able to buy up 20% of that. Likewise, if you own a property right now, you can't infuse the IRA now after the fact. Whatever you're doing needs to be set at the beginning and needs to remain consistent for the life of the investment. Good questions, by the way. Thank you so much for typing in questions. Next question. When flipping a home, can a self-directed IRA be an owner in an LLC that flips the home or any other type of LLC? The short answer is yes. You could take an IRA, invest it into an LLC, and then buy and sell and hold real estate within the LLC. This structure is something that's become a lot more popular in recent years. It all spawned off of a court case over a decade ago called Swanson versus the Commissioner, where a gentleman took his retirement plan, put it into a company, and then appointed himself controller of the company, and the court said that that was okay. There have been, to my knowledge, at least 2 or 3 other cases now that have referenced the Swanson case and seem to some degree, legitimize that structure of taking a retirement plan, putting it into an entity, and then appointing yourself controller of the entity. So at Entrust, we take the approach that we don't tell people to use an LLC. We also don't tell them that they cannot use an LLC. If you want to take your IRA and buy a property directly, we allow you to do that. If you'd prefer to take the IRA and put it into an LLC to hold the property, we allow you to do that as well. The difference with the LLC versus the direct technique is really just a matter of who processes the paperwork. If you buy it through an LLC, the manager of the LLC is going to sign the documents and send the money to make the investment. If you buy it directly, Entrust is going to sign the documents and send the money to make the investment. Same thing for paying expenses. If you have a repair or an improvement that needs to be done, if you own it directly, your IRA will cut the check and you'll coordinate with us to do that. If you own it through an LLC, the manager of the LLC, you or whoever you appoint as manager, will just cut a check out of the LLC. So a lot of times you hear the term checkbook control IRA. That's when somebody utilizes an IRA, puts it into an LLC, and then holds their investment through the LLC. And again, that is a structure at Entrust that we do allow. We don't in any way endorse it or promote it or suggest it because it's an administrator of self-directed IRAs. That's not what we do. But we do allow it, and we do have clients that go that route. And if you want to take your IRA and put it into an LLC, you do that through an Entrust account. Another question about our fees for an individual, this is for an IRA. What are the fees to open an individual retirement account? It's $50 to establish an account. That's 50. It's a one-time fee to establish either an individual 401k or an IRA. That's really the fee for us to process the paperwork, do all the background reporting that we're required to do per the Patriot Act, load the account in our system, and establish the individual retirement account. Believe it or not, there's actually quite a bit of manpower that goes into that. So a lot of times people will question why we have to charge $50 to open an account. There's actually a hard cost to us to establish accounts, and so that's where the $50 comes from. I don't think from a corporate standpoint we really consider that an income generator. Obviously, it's bringing in income, but I think it's more just covering the time, energy, and the hard cost to actually establish the account. So periodically throughout the year, particularly in the first quarter, we will waive that $50 setup fee as a promotion. But generally speaking, if you want to open an account with Entrust, that $50 is a set fee that you should be prepared to pay if you want to set up an account with us. And relatively speaking, when you wrap in all of our fees are pretty reasonably priced, I think. And again, maybe I'm biased here, but I think with the experience that we have and the seamlessness and the flow of the process and the accessibility that we have with the people on staff, I think for $50 setup fee and $299 annual fee, what we do is fairly reasonably priced, and I think it's pretty well priced in the industry. You know, if you run the numbers, you may find somebody comes out a few bucks cheaper, maybe a few bucks more expensive, but a lot of self-directed IRA companies, they know who they compete with, and we're all priced into a relatively similar range. So it really comes down to who are you actually working with, who's going to pick up the phone when you make the phone call, who's going to handle the processing of the transaction when you're ready to make an investment, and who do you think is going to do that at the best value and the best price for what you're trying to do. And there are obviously competitors out there. I encourage you to look at the competitors, look at us, compare us to other companies, and figure out who you think is going to be the best to work with. I think we live and die by the service that we provide our clients, and hopefully the education that we can provide for the prospective clients and things like this, like what we're doing right now. Another question here. I don't really know the answer to this question. Martha, you're kind of stumping me today. I appreciate the difficult question. But the question is, does a non-prototype retirement plan like a 401k profit-sharing plan need to be bonded or have a bond that the DOL sometimes checks in on? I don't know the answer to that. I think that's more of a qualified plan question, and I'm not an expert in qualified plans by any stretch, but I don't know how that would work. I think I'd have to defer that to John Paul Ruiz, who's our education coordinator, he'd probably be able to answer that with his eyes closed, but I don't know the answer to that question. So, Martha, if you don't mind, I'd ask you to send me that question via email. I'll forward it to Mr. Ruiz, have him give us an answer probably by the end of the day, and I can get back to you with a sound answer, but I don't have a definitive answer, unfortunately, at this time to provide that. The question here is the same precious metal account, 25% of compensation paid to the employee. I think what it's asking there is if you set up an individual 401k plan or a SEP IRA account that's going to be focused on precious metals, do the same contribution limits apply? And the answer is yes. The term precious metal is, again, more descriptive than it is technical. An IRA is an IRA. A solo 401k is a solo 401k. If we put the term precious metal in front of it, it's more just a marketing thing so that we can make people aware of the fact that they can buy metals within those accounts. Now, internally, we do have a separate fee structure for metals accounts versus non-metals accounts, metals accounts being cheaper on an annual basis. And again, going back to competition, we do that because in order to be competitive in the precious metal space, we needed to discount our fees. We can't charge our standard $299 per asset per year because we'd be priced out of that market. So for a metals account, if all you're looking to do is metals, we can set up an IRA at a flat $150 a year fee. There's no setup cost and no transaction cost. So you can see it's discounted from our $299 per asset per year that you would normally pay. With the metals account, it's $150, and that's kind of an all-inclusive fee. All right, let's see. Winding down here, we're wrapping up. We've got a few minutes left. I'm going to try to make sure that I answer all the questions that have been put out. If for some reason we don't have time, I will give you my contact information. Again, you can jot it down, shoot me an email, give me a call offline. I'd be more than happy to answer one-to-one any questions that you have. If you do contact me today, please note that I will be a little bit backed up after an hour-long presentation, so it may take me just a little bit longer than normal to get back to you. But I promise you, if you send me an email, I will reply. There's a question here, and it's a good question. It asks, can I convert a SEP IRA to a Roth? And the answer is yes. Roth conversions are now allowed for anybody regardless of their income. You can convert a pre-tax account, whether it's a traditional, a SEP, a simple, or even a 401k, into a Roth IRA if you decide you want to do that. I have clients that put money into their SEP and then turn around and convert it to their Roth, and that's fine, as long as you understand that you're going to pay taxes on the amount you convert because you're taking a pre-tax account and turning it into an after-tax account. But as far as eligibility to do that, you can do that regardless of your income. There used to be income limits for Roth conversions. They lifted that in 2010, so now anybody regardless of income can convert to a Roth IRA if you want to. And typically Roth conversions are good when you have like an abnormally low tax year. You know, if you've got some write-offs or something that's carrying forward, that may be a good time to convert. Or if you just think you're going to do really well in the future and you want that to be in a Roth account instead of a SEP or a traditional, then you may want to go ahead and pull the trigger and do the conversion now. Question here, in the course of buying an investment property through a self-directed IRA, what choices do I have to get financing for the transaction? Could I go to a bank or a private individual? That's a great question. Within an IRA, there are rules that state that you're not allowed to personally guarantee debt associated to the IRA. So if your IRA is going to buy the property, the only way to bring on financing is if that financing is called non-recourse financing. What that means, simply put, is that you don't personally guarantee the debt that your retirement plan is taking on. Now, the good thing is that there are banks out there that do non-recourse loans. The bad is that there are only a handful of banks that we know of that do these loans, and we're always looking for new banks that are willing to explore it. But I'd say right now, realistically, there's about 4, maybe 5 banks that we know of nationwide that do non-recourse loans. And I keep a list of who they are. The company has a list of who they are. And I could send you that list. If you'd like to send me an email, I'll reply back with a list of non-recourse lenders. They typically look for somewhere in the range of 35 to 40% down, so you can pick up on the fact that the down payment is going to be a little bit higher than what you get with your standard financing. And they generally only will lend on rental properties. Now, you may find a bank that's willing to do a fix and flip. I'm sure they're probably out there, and you can probably find one that will do that. But my experience has been the majority of the non-recourse lenders are looking to finance properties that are rental properties that have a steady income stream, and they're looking to finance somewhere in the range of 60 to 65% of the value of the asset. The question about the value-based fee option, it's really hard to quote that because it's value-based and it's a tiered system. The best thing to do would be to pull up our fee schedule on the web and look at option 2. There's a different multiplier if you're between $1 and $25,000, and then 25 to 50, and then 50 to 150. So it's easiest just probably to go to the website, pull a copy of that fee schedule, and that'll help figure out what the cost would be for the value option. We do allow you to once a year switch fee options. So hypothetically, if you start with option 1, thinking you want to pay us $299 per year per asset, and then you want to switch to option 2 and pay us on value, we do allow you to do that. We don't like you to flip-flop back and forth multiple times in a year, but if you want to make one switch in a year, we will allow that. Question is, are fees, can they be paid with personal funds? And that's a great question. Yes, you could pay our fee with personal funds, either a credit card or a check. If you want to pay that out of pocket, that's fine. The fee associated with the investments that you hold within the IRA has to be paid by the IRA. By that I mean if you buy a property that needs a new door, you would have to pay for that new door out of the IRA. But if our admin fee is $299 a year and you prefer to pay that with a personal credit card, that's not a problem at all. Okay, question about having employees with a solo 401k. For all intents and purposes, if you have common law rank and file employees, you don't qualify for an individual 401k plan. You would have to do a full-blown 401k, and that's outside the scope of what we offer here at Entrust. But if you do have a business that's either just you or maybe you and your spouse, you could set up a solo 401k and contribute to that with 2 people if they are married. Husband and wife, for example, they could have one plan that they both participate in. But if I have an employee and I have 3 or 4 people that work for me, my options of a solo 401k kind of go away. You'd have to go with the full-blown 401k, which unfortunately is a little bit harder to administer and can be a little bit more costly. And you'd have to find a plan provider that sets up those full-blown 401k plans. So in that case, you may want to look at a simple IRA or maybe even a SEP IRA. A SEP may not be a great option if you have a lot of employees, but that's kind of where those plans come in as well. If we end our business, will we be able to roll our solo 401k into a self-directed IRA? Absolutely. You can, anytime you shut down a business or terminate a plan, you can roll those assets out to an IRA with us or with another company, and then you can do whatever you decide you want to do with those funds. Question back to the split ownership. I have a property that's split 80-20. How will the title work? It would basically specify the 80-20 split. So if you have John and Jan Doe, and they're both using an IRA, the deed would read something like the Entrust Group for the benefit of Jan Doe IRA, 80% owner. The Entrust Group for the benefit of John Doe IRA, 20% owner. Or it might say undivided, or it might say tenants in common. But it's basically going to specify with 2 parties involved what does each party own, and then you'd keep that consistent. Another question about how our fees are going to be paid, whether it's out of the account or out of a personal credit card or check. It's either or. You can pay our fee personally, or you can pay our fee with undirected cash in your account. Can a property be purchased through a self-directed IRA but then be put in a trust once purchased? It depends. If you're talking about putting it into an LLC or a land trust, the answer is yes, you can do that as long as the IRA is listed as the owner of the LLC or the land trust. If you're talking about like the Smith Family Revocable Trust, typically you wouldn't move the asset into the trust, but instead have the IRA as the owner of the property, but then have the beneficiary of the IRA be the trust. So if something were to happen, which is the IRA would then be inherited by the trust, which is the beneficiary of the IRA. That's typically how we see that handled. Notifications here. I think I'm running out of time. I'm going to keep going, if that's okay. I've got some good questions here, and I really enjoy doing this Q&A webinar because it's getting right to the core of what you're hoping to get. So if you have time, stick with us here. We're right at about an hour. I'm going to keep talking. If you need to go, the presentation is going to be recorded. You can always hashtag us at #AskEntrust or email me at phagen@theentrustgroup.com. But I'm going to go ahead and just keep continuing until I get through some of these questions. If we go another 10, 15 minutes, I'll shut it down either way. But I'm going to stay online here until I can get through some of these questions that I still have in the queue. back to the questions. Please, I apologize. We talked about the fees being paid out of the account or being paid with a credit card. We talked about the trust. Okay, good question here. Can Entrust provide any referrals for attorneys or CPAs that are knowledgeable on self-directed IRAs? Yes and no. I can tell you in the markets that I focus in, I've got some contacts that I've come across over the years that are pretty knowledgeable about what we do, and I would feel comfortable saying that they would be worth a phone call if you're looking for a quote-unquote expert on these things. To some degree, we end up knowing more than some CPAs and attorneys. I don't mean that in a disrespectful way to the CPAs and attorneys, but what we do is very isolated and very niche, and this is all we do. Like literally, I spend every working hour of the week talking about and doing self-directed retirement plans. So I do that, and the whole company does that. So we end up knowing this stuff very well. Now, we have to be careful not to provide advice or tell you how to do something, and so we have to occasionally defer to the professionals. But if somebody called me and said, do you know of an attorney in your market or a CPA in your market that knows a lot about self-directed IRAs that I could call? Yes, I could give you a couple of names. Now, Entrust as a company, we don't have like a master list. I don't know if you called corporate what kind of response you would get to that. I think it's more regionally based. I think different people in different areas of the country have different contacts. But ultimately, if it's a black and white question about self-directed IRAs, we can give you the answer to the question. If you're looking for somebody to say, this is how you should structure your investment, or this is what you should do with your money, at that point, we have to put our hands up and let you go talk to somebody else because we can't play that role. Again, we can't be a fiduciary in the relationship. Kind of a yes and no answer there. Okay, are there fees ran through the IRA? Are they separate, meaning the fees need to be factored into the max contribution? Going back to the way you pay our fees, you can either pay us with a credit card, a personal check, or you can have the funds come out of your undirected cash. So if you decide you want it to come out of the undirected cash, you need to have a little more than what you need to make the investment. So if your admin fee is going to be $300 a year, give or take a few bucks here or there, and you're going to have the fee come out of the account, you're going to want to have another $300, $400, maybe $500 sitting in cash with us so that those fees are covered for the year that you're looking to have them covered. If you're going to pay our fee with a credit card and you want to use your entire balance for the investment, that's fine. We can build a credit card for the admin fee. Question is, can real estate be owned as an investment purchased by a precious metals account? Technically speaking, all of our accounts are Entrust accounts. The term precious metal versus what I would call just a regular account. Again, that's more descriptive, and really the only difference is the admin fees that we bill. If you have a metals account, it's $150 a year flat. If you have a non-metals account, then you're talking about the $299 per asset per year, the transaction fees, the setup fees. So if somebody was a metals account holder on the $150 annual fee and they wanted to buy a piece of real estate, we would have them set up a separate account to buy the real estate because the admin cost to do the real estate is more than the fee for buying metals. Quite frankly, if our transaction team was buying and selling real estate at the metals price, we'd be losing money. I mean, there's a reason why we charge admin fees. It's because we put a lot of work into the assets that we administer, in particular real estate. Anybody that's ever gone through a real estate closing realizes there's quite a bit of paperwork, quite a bit of time, energy, and effort that goes into that. With the metals, there's energy and effort that goes into that as well, but we've got it pretty fine-tuned to where we can do that on a high volume and even at a discounted rate, still be profitable in the metals division. But no, if you're asking if you have a metals account and you want to buy property, would you have to set up a separate account? Yes, you would set up a quote-unquote normal account and have it run through the normal fee schedule instead of the precious metal discounted fees. Okay, well, we're at about 6 minutes after the hour, and I think we are out of questions. So this was fantastic. I enjoyed doing this. Hopefully it was a good use of your time. If there are any other questions, literally what I just did in the last hour and 6 minutes is kind of what I do all day long. And we have other people like myself on staff. We have a client service team out in Oakland. We have several regional offices spread throughout the country. You can call up somebody in your area, your neck of the woods, so to speak, and talk to somebody that does this day in and day out. We're here to be educators. We're here to answer questions, and I appreciate you taking the time today to join us. Hopefully it was worth your time. And Actually, I had one more question pop in, so I'm going to stick around for one more question. This will be the last one that I answered. And the question is, if you buy precious metals through a retirement plan, how are those precious metals stored? And the answer to that is they are stored within a storage company that we would work with, that we have a relationship with. And I think at the moment there's about 5 or 6 different storage companies that we have relationships with. You can get them from our website if you go to theentrustgroup.com. Look under the Precious Metal tab. There's information on the storage companies that we work with. We're not directly affiliated with any particular company. You can store with whatever company you would choose to store with, but physically those metals cannot be in your possession. And we don't have the ability to hold them because we don't have the capability of safeguarding the metal. So you have to work with us for the IRA administration side and then work with the storage company, the precious metal depository, physically have those metals stored. And then they report back to us, and we then report that back to you. I think that's it. I think we've answered every question that came in. If I'm looking at the screen right, we had 34 questions over the course of about an hour, which is fantastic. So thank you for joining us today. Thank you for your interest in self-directed IRAs. Again, we are the Entrust Group. We're one of the largest and oldest self-directed IRA providers in the country. We are here to help you if you have these questions. You are going to control what you do with the self-directed IRA, but we're here to support you and answer any questions you have in relation to that. So please go to our website, go to #AskEntrust. If you have questions, you can tweet that over to us. We're here to answer questions and provide any assistance that we can. I'm going to go ahead and shut it down for the day, but again, I thank you so much for taking the time, and we will look forward to talking to you very soon. Take care, everybody.